Welcome to Legal Lines. This program is brought to you by the York County Bar Foundation. My name is Tom O'Shea, the host of this program, and my guest today is attorney Robert Hamilton. Welcome, Bob.
Thank you.
And Bob is an attorney with MidPenn Legal Services, and he is the director of the Low-Income Taxpayer Clinic.
Correct.
I said that correctly.
Correct.
And before we talk about the taxpayer clinic, let me first ask a little bit about MidPenn Legal Services.
Right. So MidPenn Legal Services, we operate in 18 counties in central Pennsylvania.
Which includes York.
Includes York, of course. We do a wide range of services that we do provide. Family law issues relating to bankruptcy, some custody issues, and in addition to the tax clinic as well. And there are some other issues that I don't particularly handle, but
you do handle all the tax cases.
All the tax cases come to me, yes.
Okay. And your office is where?
My office is actually based in Carlisle, but again, we handle 18 counties, so I'm traveling a fair bit throughout the region.
All right. And with your office in Carlisle, if somebody needs your services for the taxpayer clinic, are they able to deal with you over the telephone?
They are. What would happen, they would call our 844 number. It's 844 MPLS tax. And that would go to our intake unit, who would then open up a case, and that case would then come to me.
Okay. And for most of the work that you handle, you really never need a face-to-face meeting with a client?
A lot of it can be done over the telephone, and then if I need documents, they can send them through fax or through email.
And the 18 counties that you're covering, I'm not going to ask you to name all 18
I don't think
I
I could remember them. No.
But basically it goes from Berks County, which would be Reading.
Correct.
Up to State College.
Correct. And then as far west as, I believe, Bedford and Blair County as well.
And then as far south as the
York,
Mason-Dixon
right.
line.
Correct.
So anybody in that area who would have a tax problem and would qualify for MidPenn Legal Services, they would be able to contact you.
Correct.
By telephone?
By telephone.
And there's also a website that they can contact you that way.
The website will direct them to the intake line, the 844 MPLS tax, but that will give you more information about the clinic as well.
Okay. Now, let's talk a little bit about MidPenn with respect to income requirements for clients.
Yes.
There are income criteria for a client to go to MidPenn Legal Services for other types of matters, such as child custody, bankruptcy, landlord-tenant disputes, etc.
Correct.
Okay? And if you qualify on an income basis, the attorney services are free of charge.
Yes, absolutely.
Now, with respect to the taxpayer clinic, is that the same?
Our income limits are double that of the rest of the services provided by MidPenn.
So somebody who might not qualify on an income basis for other types of services MidPenn provides may qualify for the taxpayer clinic.
That's correct.
And when you say our standards, our income criteria is double, can you translate that into dollars?
Absolutely. So our income limit is set at 250% of the federal poverty level, which changes every year. But we have to, through our grant from the IRS, accept with 90% of our cases have to be within that 250% limit. To give you a dollar amount for a single individual, a single taxpayer, one-person household, that amount extends up to $29,500 roughly this year. For a family of four, that amount would go to about $60,000, and then it increases with the increase in family or household size.
So if somebody met that income criteria, let's say somebody who was in a family of four made less than $60,000 and they had a tax problem, they would be able to contact your office through MidPenn.
Yes, they would automatically qualify for our services.
And they would have free legal counsel handling their tax issue.
Yes.
Okay. So how does someone make the contact?
Well, they would the first line of contact is that 844 MPLS tax number. That we'll direct them to our intake unit. Our intake unit is bilingual, so they speak English and Spanish, and we do handle a fair amount of Spanish speakers. That person, the intake worker, will go through a list of questions, ask for a brief description of what the tax issue is, and then they're going to ask them their income information, household income, monthly, and we average that out for the entire year, just to make sure that they qualify. And then, assuming that they do, the intake worker will then write me a summary and send me details about the particular taxpayer and the client. I'll review it and then reach out to the taxpayer through the telephone number that they provide.
Right. So anyone in the 18-county area can call the intake person,
Yes.
and they will take the information as to whether or not they're going to qualify.
Yes.
Am I correct that they have to then document their qualification in some way?
Yes. Yeah. They'll mark it in the file. Yes. And the taxpayer is also required to sign a statement saying that they've given accurate, correct information.
Okay. With respect to the taxpayer clinic, what types of taxes are we looking at here?
Specifically, income taxes. And when I say income, they have to have a federal income tax issue.
So an issue with the IRS.
Correct, yes.
Oh.
We do handle state income tax as well as local income tax issues as well. However, in order to assist them in those types of cases, there has to be an underlying federal income tax issue.
So this would apply to anybody who had a problem with the IRS and their federal income taxes, but if that bled over to state income taxes or local income taxes, you would handle that as well?
Yes, yes.
But you wouldn't handle real estate taxes or any other type of tax problem that somebody would
No,
have?
unfortunately, or inheritance taxes, we do sometimes get calls about those as well.
Okay. So when you have people contact you and qualify, you're dealing mainly with the IRS?
Yes, yes.
Okay.
Yes.
And what types of cases do you generally see?
It runs a wide gamut. The majority of the cases that we see are collection cases. So taxpayer receives a bill from the IRS and they're wondering how they can repay that bill. And there are different vehicles and tools available within the Internal Revenue Code that we can use to assist them to repay it, whether that's a full repay through an installment agreement or a reduced amount through something called an offer in compromise.
How would somebody typically get in trouble with the IRS? I mean, if somebody is working for a company and they have a payroll, deduction like all of us do who have a salary, the company deducts for the taxes. How is it that somebody then can wind up with a tax problem where they didn't pay enough?
A lot of times, an individual will be audited. They'll be sent a letter saying that they want, the IRS would like an explanation or supporting documentation to support, let's say, a dependent that the taxpayer had claimed on their tax return. Say the taxpayer never responds to that notice. There's a certain window of time that the taxpayer has to respond before the IRS sends them a bill. And if they don't respond, they'll get a bill. So they're stuck with this tax liability and they'll need to repay it.
So, you use as an example a dependent, which typically would be somebody claiming a child on their tax return, although it could be some other dependent.
Correct, yes.
And a common problem might be that somebody's claiming a child who is also working already and filing a separate tax return, claiming themselves as
Right. It can get dicey, and there can be a lot of intermingling issues going on at the same time.
So and the IRS eventually catches this.
Yeah, and we're there to also assist the taxpayer to make sure the system is working properly and that they get the situation figured out and they don't get more letters from the IRS.
And when we talk about claiming someone as a dependent, that I assume you get situations where separated parents both want to claim the child.
Yes, fairly often.
And if they both do claim the child, the IRS is going to find out eventually.
Yes,
How do they find out?
In that type of scenario, a lot of times these situations are worked out through like a custody agreement or a divorce marital separation agreement. But even in the event that they are specified in there and one parent does not follow that, the one parent who files first, and usually electronically, and then you'll have the other parent filing or trying to file electronically using that child's Social Security number. If that happens, the second filer is going to get blocked from filing electronically.
And most people do file electronically now.
Most people these days do, yes.
And so anyone who wants to claim a child is required to put down the child's Social Security number.
Correct, yes.
And I'm old enough to remember when you didn't get Social Security numbers for your children until they got a little older, but
Okay.
now you're required to get a Social Security
Yep,
number
right from birth.
after
Yep.
the child is born.
Right.
So, so when you claim the child as a dependent, you put that Social Security number down, and then the next person who wants to file a return, if they use that same Social Security number, the computer system that the IRS uses already automatically blocks them from
Correct.
filing the return using that same Social Security number.
Correct.
And then what do you advise the client to do?
The client would then have to file a paper return, which once the IRS receives, it'll force an audit of both taxpayers, both parents. And at that point, they would have to each respond to the audit notice.
All right, so it doesn't mean that the person who filed first and blocked the other person from claiming the child wins.
Correct, yes.
The person who filed first might have incorrectly decided that they were entitled to claim the child.
Yes. Yes.
But then the IRS makes the determination as to who is legally entitled to claim the child.
Correct,
Now,
yes.
is there criteria to decide that?
There are, and it really depends on the credit that is at issue. For the typical clients that we help, the earned income tax credit is the biggest. And there are certain rules as far as residency, support, and relationship that the client has to meet in order to claim that earned income tax credit for the year.
So if there was a dispute between two people who claimed the child as a dependent, and you were representing one, you would go through whether they were legally entitled
Right,
or not,
right.
and then you would present that where that argument.
We would respond to the audit notice typically. There's an 800, and every IRS notice, every IRS bill, in the top right-hand corner, there's a phone number to call, and it also lists the tax year at issue. We reach out to that number. There's also a practitioner line that attorneys, accountants, enrolled agents with the IRS can contact that is usually a little bit quicker than the number that's listed on the notice.
And if you were on the side of the person who turned out to be wrong in claiming the child, they would owe the tax that they should have paid had they not claimed the child.
Yes.
And some type of penalty?
Well, there are late filing penalties and interest that are associated with that penalty as well. So those would continue to accrue. So it's the tax plus interest and penalty.
Now,
yes.
if they couldn't afford to pay that, are you able to sometimes negotiate something with the IRS?
Yes. And there are basically 4 different types of scenarios that we can assist them with. But typically what we would try to do is get them into what's called an installment agreement, where you're paying a set monthly amount over the period of anywhere from 60 to 72 months. Or, as I mentioned earlier, the offer in compromise program, where you're paying, it's basically a settlement of your IRS tax debt for a much reduced amount.
We're going to talk about that in a few seconds, because right now we're going to take a break. This is Legal Lines. Welcome back to Legal Lines. My guest today is attorney Bob Hamilton with MidPenn Legal Services. Bob is the director of the Low-Income Taxpayer Clinic, which is part of MidPenn Legal Services. Welcome back, Bob.
Thank you.
And I know we talked about the clinic and the qualifications for people dealing with the clinic in our first segment. Just a little bit about the clinic. How long has it been in existence?
Just shy of 2 years. It officially opened in January of 2015.
And you are the only attorney in that?
I'm the only attorney right now, yes.
And do you have any assistants?
We have one paralegal, yes.
Okay. And as we pointed out in the first segment, anybody who lives in an 18-county area, which includes York County, would be eligible to call you. And even though your office is in Carlisle, they can do most of their contact with you by telephone.
Yes, and I should mention, even though they can contact us and they can send us documents through a fax machine or an email, if they live near one of the other 14 MidPenn offices that's close to their county, they can visit that office as well and use that fax machine to send me whatever paperwork they have.
So somebody who wouldn't have access to email or a fax machine
Right.
could get the documents to you by doing that.
Correct.
That's good to know. Now, when we talk about this, we already mentioned that that basically you're dealing with problems with federal income taxes.
Yes.
And one of the issues that you told me is a common issue with many of the cases that you handle is the earned income tax credit.
Yes.
Now, can you explain what the earned income tax credit is?
Sure. It's a refundable credit. It's available to working families, either with children or without. It's a credit that's added on after the tax liability on your tax return is assessed. So it could potentially get you a refund, or it could reduce your tax liability to zero. It's the largest refundable credit that's available to the individuals that we service that are within the 250% level.
So this income criteria as to whether or not somebody could qualify for that credit.
Correct, yes.
And that criteria varies with family size
Yes.
and the number of children and okay.
Yes.
And if my understanding of this is correct, the refundable credit could exceed the amount of money that somebody paid in withholding taxes.
Yes, yes.
So if somebody had an income where their employer withheld, let's say, a total of $3,000 of money from their paychecks through normal withholding, in some instances, they might get a refund of over the $3,000.
Correct. The largest refund I believe that is available through the earned income credit is about $8,500 for last year. It does adjust each year. But yes, in that scenario, that person would get a sizable refund.
So how is it that this would cause legal issues where someone would need your services?
Right. So unfortunately, because it is one of it is the largest refundable credit to the working poor, there is a high instance of fraud that happens. So you have instances where people are claiming dependents that they shouldn't be, or making up dependents, or there's various issues that could arise, but there is a very high audit rate of the earned income tax credit. So if you've improperly taken it, and the IRS sends you an audit notice, you're going to have to prove that you have, especially with dependents, that the dependent lived with you for a certain amount of time throughout that year and actually shares that address with you.
When you say there's a high audit rate, can you tell us what that rate is?
So for the general population, that's all taxpayers, the audit rate would be about 1% or just about less than 1%. If you're claiming the earned income tax credit, that audit rate jumps to about 25% to a third, somewhere in that range. So people that take that credit, there's a higher chance of them being audited.
See, that sort of surprises me because I always thought that the audits go for people at the higher income levels,
Right.
and that the IRS doesn't target people with lower incomes.
Right, you would think so, yeah.
Except for people who try to use or who are using the earned income tax credit.
Correct. And that's specifically because it is such a large credit that it results in large refunds, and people do take advantage of that.
So if there is somebody who has a problem with the audit and they qualify for MidPenn Legal Services, they can contact you.
Yes, yes, we do
And
assist.
you would handle cases like this.
Yes.
You also stated in our first segment that many cases result in what you call an offer and compromise.
Mm-hmm.
Can you explain that?
Sure. So the way the offer and compromise program works is it's essentially a settlement. It's similar to a bankruptcy, but there's no hit on your credit score, and you don't have to repay all your creditors. You're showing the IRS, they call it bearing your financial soul. So what we have to do is gather the taxpayers' asset information, if they own a house or cars or other bank accounts or retirement accounts, whatever. We disclose those assets. We also have to disclose monthly gross income from all sources. So if there's two people living in the house, both earning income, we have to show what their gross income is through the last two, let's say if they're working, their last two pay stubs. And then we also do the monthly expenses. And so depending on where they shake out with the amount of available equity in their assets or the amount left over each month based on their income and expense ratio, those two calculations or scenarios will give us a number that we'll then use to figure out what their offer in compromise or settlement is going to be with the IRS.
Just listening to television or the radio, someone will hear advertisements saying, "Do you have any IRS problems? Contact us and we'll handle it, and you'll owe
Right.
less than the full amount to the IRS."
Right.
Is that because of this offer and compromise program?
What those services are generally advertising are through the offer and compromise program, yes.
Okay. And does the IRS have certain criteria as to what they'll accept? You said that you have to fill out income forms, expense forms.
Right. So just a typical scenario, let's say that the person shows that they have their monthly expenses exceed their monthly income, and they don't have any equity in their assets or no assets. A person they have to offer something greater than zero. So theoretically, you could submit an offer of $1. I don't like to do that because I like to show that there is I like to show good faith, basically. But we can get it to a very low amount that's manageable for the taxpayer. And it takes the IRS about 6 months to review an offer in compromise. So even if we're saying they can pay, say, $20, they're not going to owe that amount until at least 6 months down the road.
Okay, so it sounds to me as though the IRS agent who handles this has some discretion as to what to accept.
Yes, there is a whole offer and compromise unit actually that's based up in Connecticut that we exclusively deal with. So those agents are used to seeing a large volume of offer and compromise come through.
Is it based mainly on the income and expenses of somebody, or is it also based on the amount of culpability, let's say, for why they found themselves in a tax problem?
Well, you do want the taxpayer to be honest about how this tax problem arose and what they're going to do to correct it. I generally include a cover letter, or what I call a narrative statement, explaining how they got into this situation to begin with. But technically, under the terms of the offer program, they really shouldn't consider how they got into this situation in determining whether or not they want to accept the offer. But there are different rules that we don't have time to get into here that are within their internal revenue manual that they can use to calculate potential future income. So if somebody's out of work, but the IRS sees that they've worked for a period of time prior to this in another profession, they could use a future income calculation. But we haven't had any of those cases yet, fortunately.
Okay. One of the things that you told me when we were preparing for today's program that I found interesting is a common problem is people who take money out of a retirement account, especially if they take it out early.
Yes.
And that could lead to a tax problem.
Yes.
Can you explain?
Yeah, sure. So there are rules with respect to withdrawing from an IRA or 401k, and those rules have to deal with, you have to be 59 and a half years of age. There are exceptions to that, but generally 59 and a half years of age before you would incur a 10% penalty on that withdrawal. Some people don't know that. People have an IRA or 401k set up, maybe through a prior employer. They're laid off. They have to meet their monthly expenses because they don't have the sufficient income to pay those monthly expenses. And so what they'll do is they'll withdraw that money from an IRA. Maybe they do realize that they've had to withhold this 10% penalty. But they've got an increased income amount for that tax year as well that they may not have planned for. So when they go to file their taxes the following year, they've moved up a tax bracket and they're going to owe additional money as a result of that IRA or 401k withdrawal.
And so when you withdraw the money, if you're under 59 and a half years old, you're going to have a 10% penalty, plus the money you withdrew is going to be added to your other income.
Right.
So what we talked about the income criteria for your services through MidPenn, where a client would qualify for MidPenn.
Correct.
If somebody, you said for a family of four, it's roughly $60,000 of income. If somebody made, let's say, $50,000, but they took out $25,000 in their IRA and didn't pay the sufficient amount of tax on that, would they still qualify for the MidPenn Taxpayer Clinic?
They would, because at that point, if they do have a tax bill for this withdrawal, we're going to look at current monthly income. We're not going to consider a previous year's tax return.
Okay. One of the other things that you said that you have from time to time is something where it's people file a joint tax return, a husband and wife file a joint tax return, and there's something that's known as the innocent spouse rule.
Yes.
Can you explain that?
Sure. So what sometimes happens when spouses unfortunately split or get divorced, when you file a tax return, married filing jointly, you're both jointly and severally liable for that tax. So even if the IRS can't collect from one spouse, they can go collect from the other spouse, even if that spouse didn't earn the income that's going to be taxed. What the Innocent Spouse Program does, and Innocent Spouse Relief in general, is there's a vehicle that allows that spouse who either did not know about the income that was earned by the other spouse, or let's say the other spouse hid the tax file from the spouse that you're assisting, they can file they can request innocent spouse relief. And so what that would do is that would remove that joint and several liability from that spouse. And there are criteria that they have to meet, but that's generally what innocent spouse relief.
And there's something else known as the injured spouse?
An injured spouse is a little bit different. That has to do with one spouse owing another federal debt. So let's say like a student loan that they've defaulted on. And that student loan company will intercept a tax refund for a particular year. So if the one spouse wasn't liable on the student loan, they could request relief through the injured spouse program.
And these are some of the issues that you're helping clients deal with.
Yes, yes.
All right, we only have a few seconds left in our program, so I'd like to plug MidPenn Legal Services one more time. And I know you also said the Taxpayer Clinic has programs, educational programs that people can look up online to see if when those programs take place.
Yes.
And we're almost out of time, so I'd like to thank you, Bob Hamilton from MidPenn Legal Services. Thank you for being with us. This is Legal Lines. Goodbye.